I'm Bryce Norris, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Wednesday, April 10th, 2013. USDA didn't increase its projected U.S. carryout for corn, soybeans, and wheat as much as the trade expected today, but the agency's world-ending stocks estimates all rose significantly. Market analyst Paul Bergner joins me to discuss these at times conflicting numbers and what they mean for prices. USDA's estimates for corn stocks went up both in the U.S. and around the world, but that didn't keep corn prices from rallying at least a little. The government increased its forecast for U.S. carryout by 125 million bushels, just 1 million bushel more than our farm futures estimate, but less than trade guesses. The government's estimate of March 1st inventory put out at the end of last month suggested weaker feed usage. USDA indeed projected 150 million bushels less corn will be fed this year. Exports were also lowered by 25 million bushels, but part of those demand cutbacks were offset by a 50 million bushel jump in the amount of corn used for ethanol. The potential for an increase was highlighted by today's ethanol production numbers put out by the Energy Information Administration, which rose 47,000 barrels a day last week to reach their highest level since corn prices soared on drought fears at the end of June. USDA's global carryout estimate, however, included not only an increase for the U.S., but for China as well. With increasing reports of problems with the quality of corn inventories in China due to wet conditions during the fall and winter, the trade appeared to discount those numbers for now. New crop December futures also held the line on selling after an attempt to break the market this week. Forecasts remain cool and wet for the next 2 weeks, with planters parked for now. Paul, what's your takeaway for today's report for corn, and what should producers be doing before heading to the fields this spring?
Well, you know, Bryce, I think what we've done is we've balanced some of those surprises from that March quarterly stocks report to start with. And the feed numbers, I think, dropped as we expected. That one didn't surprise me. A little surprise in the ethanol numbers, but nothing big there. I do think that we've taken 35 cents out of the price of gasoline out there since late February, and $1 out of the price of corn. So the math is starting to work a lot better. We got the highest ethanol margins since November of 2011, and I think that's helping on the demand side there. Those planters do look like they're parked for a little while, and it does look like there is a chance for a rally up over 550 for new crop futures. So I think there is an opportunity out there to price a little bit of corn before we roll those planters and before we get really busy this spring.
USDA's estimate of March 1st soybean inventories were higher than the trade expected, but the agency kept its current forecast to carry out on August 31st unchanged at 125 million bushels. While the stocks report implied a bigger crop, USDA accounted for this in a bucket for mistakes called residual usage. But that increase in supply was offset by stronger exports and crush. As with corn, USDA's global estimates for soybeans were less comforting. Estimates of South American production went up and demand from China was cut, a reduction possibly caused by delays shipping new crop out of Brazil. The result increased world stocks by around 90 million bushels. Soybeans traded both sides of unchanged, finishing the session with modest losses today. Maize surged briefly above $14 when high-frequency computer traders bought the carryout number, but couldn't hold the gains. Paul, the higher world carryout projection could spell trouble for U.S. exports next fall. I know it's early, but do you think the market is also starting to worry about an increase in soybean acres here in the U.S. this spring?
You know, I think there has to be some concern with that. I think as we look out there, the prices haven't really reflected it yet, but I do think there is some concern that we might be picking up some soybean acres a little bit later in the spring. I think the first opportunity to really take a look at that will be Monday when we get out those planting progress reports for what's happened in corn. It'll give us a little bit of a hint as to whether or not we're on pace where we should be or whether we're starting to slow up. Given that, we'll have to see what that looks like. I think those large ending stocks numbers are starting to become a little bit of a concern. concern, and I do think it's going to impact exports when we come into the fall and we start to harvest this U.S. soybean crop. I was a little disappointed. I thought maybe, given some of the reports that we'd heard, that we would see a little bit of an adjustment in the Argentine and Brazilian crops. We didn't see anything there. So given that, it's going to be interesting to see where we go from here. I do think that we might have some opportunities to price some 1250 beans in the not too distant future. That's something to really keep an eye on, and maybe a chance. We may have missed it, but if we can stay even where we're at now, we're still profitable, and I think that's something we need to consider, getting a few beans marketed.
Today's data for wheat didn't seem to be all that bearish. USDA's forecast of ending stocks increased only 15 million bushels here in the U.S. World stocks, however, were up more, 150 million. That was mostly because USDA found more 2011 crop wheat around the world. Even another hard freeze on the Southwest Plains this morning couldn't support the market, which was selling off before the USDA report was released at 11 a.m. Indeed, the market seems to be discounting production problems with hard red winter wheat because losses are being offset in part by improving conditions for soft red winter wheat. What do you think, Paul? Is the market right about wheat, or is there still time for prices to rebound?
You know, I'm thinking that there's still some time for some rebound in there. I looked at the crop condition report this week and kind of took it apart state by state. And even before we got the report in from the Oklahoma freeze, it looked like really 12% of the acres improved, and about 60% of the acres were in poor condition week over week. So it'll be interesting to watch that as we go forward. The other thing about some of this frost is the wheat that's getting froze is the best wheat. It's the stuff that's the furthest along. It's in the best condition, so we're causing damage to the best wheat. It'll be interesting to see what happens out of the frost from essentially South Dakota all the way to Texas. So we'll see where that one goes. But I do think that there is some opportunity to see some upticks in this price. We've seen strong exports for the last 2 months, and USDA left that number alone. And so we'll see where it's at. If we don't see anything better, I think then crop revenue protection is what really holds us together on the wheat side. I'm not interested in doing a lot of selling at the prices where we're at today.
Well, thanks, Paul. We'll take a closer look at those initial planting results for corn next week as early deadlines pass for corn in the Midwest. Be sure to join us then on the next edition of The Buzz.